Hi, I'm Carlo and welcome back to CMC Markets Trend Tracker series. What do I think is top of mind for traders this week? Well, it's the US non-farm payrolls data. Recall that the start of last month, we had that mini meltdown in equity markets globally. So I think most likely the number is going to impact all markets after Friday night. So I'll be analysing today the US30 index, the Aussie, and also West Texas crude oil. With that in mind, let's jump into the charts. First up, the US30 index. You can see last week we made new record highs. Investor sentiment is high. Markets are expecting and fully factored in a 25 basis point cut by the Federal Reserve for September the 18th. Now, last Friday we had the Federal Reserve's preferred measure of inflation, the Personal Consumption Expenditure Index, which came out at 2.5% on expectations, but it did show broad-based disinflation across many sectors. That's quite a positive for the trajectory of inflation in the United States, heading lower and supporting Fed rate cuts. Now, the question is, will it be a 50 basis point cut or 25? Now, we haven't seen evidence this month of a hard landing in the United States. What we have seen is the US economy still growing, inflation falling, and that is conducive for a 25 basis point cut only. However, this may change this Friday. The US non-farm payrolls data is so important. As you recall, last month, that mini meltdown we had across global markets. So if it is a very low number, like it was the beginning of August, then that might bring into play a possible 50 basis point cut by the Fed Reserve. So at this stage, the markets aren't expecting that, but that could change on the data release. So for those of you trading US equities, keep that in mind. The technical picture here is also very strong uptrend since the beginning of August. You can see there the 20 EMA above the 50 EMA, yellow above the blue. Clearly, EMAs are trending up strongly, diverging. Momentum is very strong. The stochastics oscillator down below is above the 80% level, which suggests strong momentum behind the recent rally. Key levels to keep in mind, if there is any kind of dip in prices, traders most likely will be eyeing support levels, and they're around 40,850, the 20 EMA, 40,250, which is a 50 EMA, and then 40,000. In terms of resistance, well, we are at record highs, so it's basically uncharted territory. So keep in mind those key levels and the US non-farm payrolls data when trading the US30 index. Next is the Aussie chart, and the key driver behind the recent rally in the Aussie towards 68 cents has been the divergence between the RBA and the Federal Reserve. Inflation in Australia has been relatively stubborn, and inflation in the United States has been dropping. So with those two things in mind, we've had the Reserve Bank Governor of Australia, Michelle Bullock, come out saying it's unlikely to see a rate cut in Australia unless we make more progress on inflation, whereas Federal Reserve members, in particular Chair Jerome Powell, mentioned now is the time to change monetary policy. So that has fueled the rally in the Aussie US. The problem is with the Aussie, it has struggled around 68 cents. You can see it struggled early July and also in the last week and a half. What are some of those factors that have caused the Aussie to stall around here? Well, China. The Chinese economy still isn't growing that strongly. In fact, iron ore price has fallen over the past few weeks, and that's a key dampener for the Australian dollar. So for those of you trading the Aussie in mind, they're the key kind of variables to keep an eye on for the remainder of this week and going forward as well too. If we have a look at the technical picture, a very strong uptrend, unfortunately hit a brick wall at 68 cents. So the market seems to be waiting for some kind of catalyst that could push the Aussie a lot higher towards 69 cents. If you zoom out of the charts, you'll see throughout 2023, we had a triple top around that 68.70, 69 cents. So there are some kind of levels to keep in mind for those of you who are long and bulls for the Aussie. For those of you who think the Aussie might turn around here, it'll be some of the key events to focus on this week is the Australian GDP data and the US non-farm payrolls report. But technically, it's quite a strong uptrend. You've got the 20 EMA in yellow above the 50 EMA and diverging. You see the crossover in EMAs that happened a few weeks ago is supporting this trend. Now, the stochastics is barely above the 80% level. Keep in mind that if that does turn down south then you might see a bit of a change in direction in the Aussie. So a couple of things at play here. Not so clear in terms of direction from this point onwards, but the data will have a big impact. Support, as you can see, around 67.20, the 20 EMA, 67 cents, and 66.75, the 50 EMA. Resistance, 68 cents, around this level, and then 69, which is a triple top in 2023. Finally, let's take a look at West Texas crude oil. Quite an interesting chart here on the dailies. Despite increased Middle East tensions, the oil price has been trending lower for the past few months. And a couple of key reasons for that being, one, global growth has been declining, in particular Chinese economic growth, and that has continued to hamper future demand for oil. And secondly, the OPEC Plus members have agreed to increase supply of oil beginning in October. So a couple of things to focus on when trading oil. The technicals are also important as well. You can see a very strong downtrend in place here, as supported by the 20 EMA below the 50 EMA. But there is very strong support around that $73 US barrel mark. And you can see there around early June and again in the beginning of August and most recently, triple bottom in place on the daily chart. Will it be fourth time lucky? Is this downtrend strong enough to take out support at $73, break lower and continue south? Or are we going to bounce again over the next few days and weeks? So time will tell. But levels in mind to keep focused on 73 US dollars a barrel, and topside resistance lies around 76.20, which is a 20 EMA, and 77.60, the 50 EMA. Stochastics aren't showing much at all. They're within range, so I think traders are waiting for the next catalyst to push this market higher or lower. So that concludes my analysis on the US30 index, the Aussie, and West Texas crude oil for today. Thank you for watching, and I'll see you in the next video.